Carvana's ups and downs in the recent restructuring deal. What does it mean for the company? Who's buying EVs? Where are they buying EVs? We're going to dig into the microdata of EV sales, talk some M&A news with Cliff Banks on the AUTOVATE Podcast. Hello, my friend. Good to see you once again. Cliff, where are you this week? It appears you are in some luxury mountainside cabin.
Yeah, not this week, but I'm in Detroit.
All right.
In your studio, so.
In Detroit with your finger on the pulse of automotive news. Some of the big news that came out recently, this Carvana restructuring deal. When they debuted publicly in 2017, they were looking like they were doing pretty good off the bat. And then they just shot up to over, was it $370 a share?
Yes. Yeah.
And then came crashing back down. What's going on with Carvana? Why now this restructuring? And what does that mean for their future?
The pandemic hurt and the supply of used vehicles plummeted, and they never really have been able to sell cars profitably. They've been in growth mode up until last year before last. They ended up buying the ADESA auctions last year. Probably was a good move for them because they were saddled with 3 tranches of unsecured debt. And what they did was basically switch that out for secured debt with their lenders. They were able to use the assets from the real estate assets from the car acquisition. They reduced their interest payments for the next 2 years by $430 million each year. They still have not figured out how to sell cars profitably, but what they've done is bought themselves time, at least 2 years, to right the ship and to figure out how to cut costs even more and try to get more to the bottom line of those car sales.
Do you think the model of trying to streamline car sales direct to the consumer, is that something that will be profitable? Do you think that is a model that will eventually pay dividends for Carvana?
It's hard to see them being able to do that because if they haven't done it by now, they've been at it for so long. They've been at it in a down market. They've been at it in a bull market. But listen, they are very smart at what they do. The Garcias. I mean, this was financial engineering at its best. It's a good company. I'm not going to say it's a bad company, but again, at some point you have to show that you can make money. So whether there's an acquisition later or if they're able to cut costs to the point where they can start making money, that's the big question.
What's so expensive, though? I mean, ideally, and it looks like they did what was supposed to be done, streamline the process, right? Build these vending machines of cars. So what's so expensive in their operating model?
Well, the shipping. It's a labor-intensive model. A couple of years ago, I did a comparison of revenue and profit per employee for Carvana compared with other publicly traded dealer groups that are franchise dealers, and they performed much better. I mean, Carvana was so far down. I mean, in terms of profitability per employee, it wasn't even a question. So, I mean, it is labor-intensive. It is capital intensive, and they're out there competing, trying to buy inventory, and that's where a lot of the costs are too. They're competing at the auction. I haven't dug into their SEC filings enough to see whether the ADESA acquisition actually helped them reduce costs on car vehicle acquisition or not. But they're in a position where it's really hard to cut costs enough to get them over that hump.
Cliff, by now, I like to consider you a friend.
Yes.
And if you were to advise me as a friend with some money in my pocket, would you advise me to put any money into some Carvana stock? I mean, can you pick a side here? Is it dangerous?
I've been talking about that with a few people over the last week because the announcement of their debt restructuring shot the stock price up considerably. And I think it's back down to the low 40s right now, which is where I pretty much pegged it. I don't know that I would put money into it. You know, it pretty much gave back much of the gains that it was able to drive last week. It's already given those back this week. So
let's talk about what we've learned from Carvana overall, though. When they came out with this model of trying to streamline the process and listening to the car buyer who was a little bit tired of the hassle that was perceived to happen at dealerships, has the Carvana model proven that we do need to make changes across the board? Have the dealers listened and saw what Carvana have done and tried to change things at the dealership level? And lastly, Is this Carvana model something that can be done? Whether the Garcias are able to pull it off or not, is this something that should be tried again?
Well, I think it's always good for the market to have competition like that and to have capital and to have people who are smart about the business. They know the used car business incredibly well. But again, this is where companies like Tesla and Carvana are so perplexing. I'll share with you a story. Last year, I was in your neck of the woods. I was in Scottsdale and I was in an Uber. I think it was a Yukon that he was driving, and he had bought it through Carvana. And he couldn't find the model he wanted in Arizona, there in Phoenix, so he ended up buying it from Texas. Well, it took him 6 months to get the title from Carvana, so he was paying for a vehicle that he couldn't drive. It was sitting in his driveway. Now, that week, he actually got the title. But I'll tell you, the guy was positive about Carvana. And I'm like, if a dealer had done that, if a franchise car dealer had done that to him, he would have been spitting nails. He would have been all over, guys like him would have been all over social media screaming about it. So I don't know what we've learned. I mean, listen, it does force us to evaluate and look at our practices. And I'm saying that in dealers. I mean, it does force that. And that's a good thing, always a good thing.
Let's change topics here a little bit, Cliff, and talk about sales. Car sales overall are up across the board. Some will argue that EV sales are down. And this article that was written by McKinsey is pretty interesting. The deep dive that they did, showing that most of these EV sales are happening closer to the West Coast. Is it really that surprising that we're seeing the bulk of EV sales happening in city centers?
Well, Nick, I think we've talked about this in a recent podcast too, about the whole EV sales numbers. This is a market regional story. Certain areas are driving the EV sales numbers. And as the data from McKinsey shows, if I remember correctly, they pinpointed 210 designated market areas. And out of that 210, 54% of the EV sales are coming out of 10 of those markets. And most of that's in California. I think there's some areas in Texas, maybe the Dallas region, maybe some of the Northeast, along the Eastern Seaboard, maybe Miami area, Southern Florida. But it tells you this is a real regional story. And I think we forget that when we're writing about EVs and talking about sales numbers.
It's not surprising though, is it, Cliff? It shouldn't be surprising.
It's not surprising at all. No, it's not surprising at all. Obviously, California is going to be the driver. And much of that is Tesla. It's not even with other EVs. A lot of that's Tesla.
I find this discussion interesting because when we hear people talk about, well, is the EV wave over? Have the early adopters bought their cars and that's it? Are we going to see the end of the big EV push? Yeah. And I wonder too, how much of this do you think is maybe pushed by the oil and gas industry? How much of people now pushing back and saying, oh, EV is not the future, or give me my gas car? Is this becoming political? Is that an obvious question? Give me your thoughts on that as to where we stand with the future of EV.
Well,
I know.
First of all, I'm going to say this. First of all, I don't think we really know. We are entering the critical period, the moment of truth period over the next 2, 3, 4 years before we really get some clarity, number one. General Motors, over the rest of the year, I think they've got the Blazer, the Equinox, the Silverado EVs that they're launching. They built 50,000 in the first half of the year. We would have thought it was going to be a lot more, but the Ultium battery plant in Ohio, there's been issues and a huge learning curve there. They say they've got a lot of that worked out. GM said today they're expecting to build another 100,000 EVs over the rest of the year in the U.S. We'll see. To your question, whether it's political, and again, we're generalizing here a little bit, but there's, conservatives tend to shy away or be skeptical about the EV market. Some of that's because it's a big push on the, from the environmentalists. But then you have the Elon Musk factor, who conservatives seem to be gravitating towards because of Twitter now. And he's the one driving the EV. So yeah, it's a convoluted, muddy story. But we have numerous EVs supposedly coming over the next few years. But again, the battery plants have to get up and running. And right now there's one The rest are under construction. I think I predicted in our last podcast, Nick, that Stellantis would likely announce another battery plant. And Stellantis recently announced a second battery plant here in the U.S. The federal government's throwing a lot of money around to these companies to build these battery plants. So out of the domestics, I think there's 10 now here in the U.S. with Ford, GM, and Chrysler. And there's several others when you factor in the foreign players. And that's being driven by Biden's IRA and its $7,500 tax credit for EVs.
The microdata look is interesting, and it may come down to really looking at the information at a very zoomed-in level. Dealers may have to be shipping vehicles to specific zip codes. Instead of just sending vehicles to Phoenix, you're sending them more targeted to a zip code here and there. And
well, that would be the OEM allocation strategy. So that would be primarily up to the OEMs. But if I'm a dealer, I'm being very careful with what I'm ordering today. And because right now we're seeing the customer isn't buying, at least in the middle part of the country for sure. So
let's move on to some quick topics here. The public dealer group shares reaching an all-time high in July. Give me some quick thoughts about that, Cliff.
Yeah, it's a volatile market with the public dealer groups, incredibly volatile. However, the gains are always bigger than the losses. That's why twice, I think in July, they hit their all-time highs. But again, to me, it's probably a good investment. And I should be careful because I don't
come on. Advice. I hear you. Good investment. But again, where am I putting my money, Cliff? Come on.
But I will tell you what, if you had invested $1,000 into each of the publicly traded dealer groups on the day they went public, and if you had invested $1,000 in the S&P on the same day, you would have been much farther ahead with the public dealer groups.
Okay.
So the gains have been phenomenal, I guess, when you look at the track record.
Well, I'm here for the next bit of $1,000 news, Cliff. I want that hot tip from you. Okay.
No, I called Tesla wrong completely. I don't.
All right. Not willing to step out on that ledge today. That's fine. There was some news in mergers and acquisitions. CDK picking up CVR. Tell me a little bit about that computerized vehicle registration story.
Yeah, that was a joint venture, quote unquote, joint venture with Reynolds and Reynolds, actually dating back to the 90s. I think Reynolds had a 10% ownership in that. What was fascinating was the timing of the deal because MVSE, a titling company in California, had filed a lawsuit in 2017, 2018 against CVR. And essentially to the day that Reynolds sold its portion to CDK, the judge issued a ruling allowing, I think, the lawsuit to move forward as a class action lawsuit that's been ongoing. And you can find the updates on the bank's report. But the acquisition or the sale had nothing to do with the lawsuit. But we'll see what CDK does with that, whether if they intend to sell that or invest and double down in that titling space. That remains to be seen.
You mentioned Reynolds and Reynolds. While we're talking about them, They just acquired Xylon or Xylon.
Yeah.
The high-performance vehicle protection products. Talk to me a little bit about that. And also, you sat down with Chris Walsh, president of Reynolds and Reynolds. You did an in-depth interview, which we are going to have up on the AUTOVATE.org website. We're going to have it on our AUTOVATE Podcast YouTube channel and available on Spotify. But tell me a little bit about what you talked about with Chris while I've got you here and this acquisition of Xylon.
The acquisition is their fourth acquisition of the year, and we're only 7 months into the year, essentially. It's a F&I solution provider, actually, solutions that enhance and protect the appearance, both interior and exterior, of the vehicle, and also has some play in the whole power sport arena. They're going to keep the name, but they'll move it into their American Guardian Warranty Services. They acquired that in January. So Reynolds is on a blistering pace, so to speak, for acquisitions. And they also invested in a connected vehicle company in January. Also, they took the lead in an investment round in Shiva. Reynolds is a fascinating company for a lot of reasons. It's one of the leaders in the dealer management system space, along with CDK. I like their team. They have a lot of runway and some opportunities here. Everyone loves to hate their DMS vendor, but I think it's a different company today than what it was 2 or 3 years ago. So one that bears watching.
Well, I look forward to hearing that extended interview between you and Chris Walsh. We've got the AUTOVATE newsletter available at autovate.org. Please sign up for that. And speaking of AUTOVATE, I understand you've booked some speakers for this year's conference happening December 6th through the 8th. Who do we got lined up?
On the dealer side right now, Jeff Pohanka, who is the chairman and CEO of the Pohanka Automotive Group in Virginia. He's also the chairman of NADA this year. Andy Koblentz, top chief legal executive at NADA. Nothing happens without his knowledge and approval there. We have Chris Walsh, the president of Reynolds & Reynolds, will be on stage with me. And we have several others that are real close to being confirmed. So you'll start seeing that information roll out. We've got a lot going on in AUTOVATE this year at the conference, from the dealer side and from the whole EV conversation. And I've got a couple of analysts coming in to provide their perspective on what the future looks like. Got a couple of startups. One I should mention, one of the acquisitions recently, our investments, JM&A Family Enterprises invested in SkyVision. And that one excites me a little bit because Mark Queen, the founder of SkyVision, actually unveiled the concept at AUTOVATE in 2021, raised some seed money over the next year. It was back with us in 2022 with a real company and a product, and started selling and signing customers, and just recently landed a Series A growth round with JM&A. So I'd like to say that I think AUTOVATE had a small part to play there.
Fantastic. Well, we hope to see lots of our listeners at the AUTOVATE conference at the Montelucia in Scottsdale, December 6th through the 8th. More information at autovate.org. Like, subscribe to our podcast. Cliff and I would really appreciate it. The newsletter is also available at autovate.org, and we will see you all here on the next AUTOVATE podcast. Thanks for joining us.